There's been a lot of talk today about scale and whether farmers will actually use products from the tech community, services and such. And Farmers Business Network, in just a few short years, has over 14 million acres under its farmer network management approach and growing every day. So I think we can put that fear to rest that there is no scale in this business, and we're here to tell you why and how to build these transformative approaches that really do help the farmer have a better living, make a better living on the land. So just to set the stage, I want to just say that DBL is up in San Francisco and Palo Alto. We're an impact investor, which means we invest for both financial return and social return. We've done quite a bit of sustainability investing, including early investments in Tesla, Solar City, Powerlight, which was sold to SunPower. So we're all about sustainability, but we've been looking at agriculture for many years and developing a portfolio in this market as well, given that we do need to feed billions of people and again, improve the livelihood of farmers across the world. So that's our background. In terms of how we came together, it's interesting that venture capitalists often brag about how they get deal flow and their sophisticated and robust outreach programs, and myself included. We do brag about that and say it's a value add. Well, the way that we met couldn't have been more random. Literally, I was walking to a lunch on Sutter Street in San Francisco and ran into Amol and his co-founder, Charles Barron, whom I had met a few times, but I didn't, and of course I had heard of Amol, but we didn't even know each other. But in a chance encounter on the streets of San Francisco, in a few minutes of an interaction, I was hooked. I really did feel that what FBN was trying to do would solve not only a lot of the problems in agriculture and create a better life for farmers, but would also create a huge business and investment opportunity. So that's how we started. It's been a great run, and we're really still in the toddler phase of the company. So what I'd like to start with, now that I've established that you've solved the scale problem, is really hear from Amol. What is it that you're trying to solve with FBN?
Well, before getting into venture capital, I was in the ag business for a number of years. I was with Cargill, and then I joined Kleiner Perkins. And having been to many farms, what I saw was the problem was information transparency. Okay.
The problem I think farmers face is that lack of information and transparency. So basically, farmers are stuck with no information to make key decisions. And what that means is bad pricing, bad competition, no competition, and essentially a disrupted P&L. A situation where there's no profits available. What we try to do is aggregate data and share it back with the farmer so that they have the power of that information and they can make better decisions with it. We do that for almost no cost. So $600 a farm, no acre fees. That's how we've scaled the business in 2 short years to 14 million acres and almost a $200 million run rate of revenue. And the way we make money is not by digging into the pocket of the farmer, but actually by intercepting the commerce streams that are at the farm. And I think by doing that, what we're able to do is both save the farmer money, but also enhance their return on the back end. The other piece here is that we've raised enough money, and we have the wherewithal to not have to take any money from interest that'll be deleterious to the farmer. What I mean by that is we've raised $83 million from impact investors like DBL, Google, which is our biggest investor by dollars. And we don't need to take money from seed or chemical or fertilizer manufacturers. We're able to go to market, go to the farmer with a very clear message. We expect to be over $1 billion in revenue within the next couple of years, and we expect to be a public company. So the issue of scale is solved by essentially acres under management, but then also intercepting the commerce as opposed to just software or data revenue.
So let's talk about those seed companies you just mentioned, the ag companies. They were up here on stage earlier today, and the Bayer Monsanto panel, someone asked them about new entrants like you, and their perspective was that they're not really worried for two reasons. One, because they're really good at innovation and R&D, and two, that they can cooperate with companies like you rather than compete. So are they right, or should they be worried?
Well, they're probably right because they're monopolists, and they're monopolists that are merging with one another. So if you're a monopolist and you're merging with other monopolists, or an oligopolist merging with each other, what does a new entrant or competition mean to you? Absolutely nothing. But as far as we're concerned, I think they should be concerned about new innovation, because the way products get to farmers is through channels that are encumbered. Retailers or cooperatives that mark up the price, obscure information, and don't get real information to farmers. And what that means is farmers don't know what their choices are in a lot of cases. Larger, more sophisticated operations may, but many others don't. So the fact is, if I were Monsanto or Bayer, I may not be worried either because of the unusual market power they have and the mergers that are taking place that'll give them more. But frankly, new business models can be pretty disruptive. For example, in the case of our inputs, we offer products direct to farmers, sometimes at as much as a 40% discount. And a lot of times those are generic products which are off patent. A lot of times farmers have never even seen those because the channels to market obstruct them. That will disrupt the business of somebody who has a patented product, or an off-patent product or franchise, and it can happen pretty quickly. So given the growth of our business, I think that at some point it's going to show up on the radar screen, but I'm sure it'll be quite a long time before any of those players act.
I want to point out that it's quite unusual for a venture-backed company to have such, what did you say, a $200 million run rate so early in its life. That's quite extraordinary. And one of the ways that happened, which Amol just alluded to, is that the company is able to aggregate all of this data that the farmers volunteer and see that there is no transparency in pricing many times. And I know that one of the examples is that two farmers in the same county, a mile from each other, were paying for the same seeds a 30% difference, as much as that. And no one knew, and no one had known, and yet, of course, that wasn't something that people were happy about. And so you're able to go in, know what the pricing level is, and everyone wins because you're bringing transparency in pricing, sort of like generic drugs.
Yeah, I mean, it's unusual, but there's a concept in a lot of the seed business called zone pricing, where a Monsanto or a Bayer will take their genetics and they'll set up zones according to pest pressure or other things, so they claim, and those zones are very arbitrary. And if a farmer goes outside of those zones, the same seed may cost 20 or 30% more. And that, of course, is a huge cost, at least for a row crop grower. So the information we provide, we actually have more information on seed price and crop protection prices than anybody else. We transparently share that with the farmer. It gives them the ability to negotiate and say, why am I being charged so much more than the person right down the street, given I have similar scale? And you wouldn't believe how much pricing discrepancy there is. There's almost no parity across farms. And we can prove this with our data. So farmers are taking our data, they're walking to their retailer or their co-op and saying, I don't want to overpay for my seed or my crop protection anymore. And, because I'm one of 2 million, and you are one of 2 as a corn seed provider, or one of 5 as a Roundup provider, or crop protection provider, this information is the best tool I have to essentially negotiate. The other thing we do is we actually offer a credit solution for a farmer. So they're not hooked on the credit necessarily of the seed company or the retailer. It gives them a way of completely cutting the cord and saying, I'm going to go direct, I'm going to lower my price, I'm going to have transparent prices. Sometimes sharing prices actually works against us from a sales point of view. Like next year we have huge projections for revenue. A lot of times when we lose a sale, it's because a farmer took the information and chopped it. And our sales team sometimes doesn't like that. They'll say, why are you sharing this information? I could have made this sale. I said, well, it's our philosophy to be transparent with information. And if we can't get the best product or the best value to the farmer, then they should go elsewhere. And we're comfortable with that.
So in that way, it sounds more like a movement than just a transaction. And I know that you host farmers. Last year it was in Omaha in December, and you get 1,000 farmers in the room trading stories and giving ideas to one another. What impact do you think this approach will have on another movement, which has been talked about quite a bit here today, which is the move toward fewer chemicals, sort of more organic? Are the two goals connected?
Yeah, I mean, the information we provide to farmers frequently suggests that they're overspraying or overseeding. And, I'm an engineer, again, having been to thousands of farms. I'm not in the camp of everything needs to be organic or everything needs to be non-GMO, but what I do think is farmers should make the best economic decision for themselves. And oftentimes that means spraying less, maybe planting less seed, using less water is going to save you money. So you don't have to be an environmentalist to be bought into that message. And I can tell you our data set, which is growing every day, we have an army of data scientists who are Google, MIT trained brainiacs, look at this data every day, and you can see overseeding, overspraying, over-fertilizing is common across the board. And it's because most of the time the people who are providing you those products have an incentive to sell you more, not less. And so the information, again, sometimes suggests you should buy less, but that's okay. We want to be completely transparent and objective. And I think the economic reality can be aligned with sustainability quite easily.
And gives you a great platform to build an educational profile into what you're doing, which I know you're working on. I want to open it up for questions, but before we do that, please tell us about the latest product that you've brought, which is on the post-harvest side.
Yeah, so our business model is not to be a data or software company. We're investing now tens of millions of dollars a year in technology. We think we have the dominant analytics system in ag, but we want to intercept the commerce streams. And we did that on the input side with this program called FBN Direct. We just launched a business called FBN Crop Marketing, where what we do is we actually intercept the product at the farm gate when it's leaving the farm. And we say we can help you with a risk management solution, we can help you market your product. We find buyers who are interested in potentially preserving the identity of the product all the way back to the farm, and we finance that entire route. So we've already signed tens of millions of dollars worth of contracts to do this with farmers, where essentially we finance them, we provide all the data and information back to the farmer and the buyer, we get the farmer a premium, we get them a reduced price on their inputs, and we wrap that whole package. So now the farmer doesn't need an elevator, and they don't need Cargill, and they don't need ADM. And what that means is many, many more cents a bushel on commodity products, but on specialized crops, whether they're non-GMO or whether they're other crops entirely, a farmer can get a significant premium, many, many more dollars of profit per acre. That program, we expect to double our revenue next year, and is probably the biggest facet of our business and what we've been working towards since we started.
I mean, just an incredible opportunity. It makes me feel that in agriculture, a lot of the big names, the tractor out there, they're kind of 19th and 20th century companies that have been fabulous in terms of building successful agricultural community, but we haven't really had that many new names. And I think with products like that, there's a potential to develop those 21st century icons in ag.
Well, and it's almost impossible. I mean, again, having worked at Cargill and been in the venture side, the number one thing I hear from tech companies when I used to invest, and even now when they come to partner with us, is I'm going to go to a retailer or a middleman to take my product to the farmer. And as soon as that happens, you know that they're not going to grow. Because it's very hard to value share twice, right? Because the middleman has to get a cut, and then you have to charge something to the farmer, and it's marked up everywhere along the way. I think to build a huge company in this sector, you have to go direct to the farmer. You have to do the hard work. You have to build a sales force that's willing to do that. You have to raise the capital to do that. Otherwise, you're destined to be small. And I think a lot of ideas in agriculture are good, but they're small. And I think there's not enough challenges to the incumbents, so to speak. People who are willing to take the risk, raise the capital, do what it takes to be the next Cargill, but maybe in a better way.
And build trust. Add that to the list, because I know that's core values of the company. Do we have any questions from the audience? Otherwise, we'll continue.
Glad to see. I'm not the only one having technical difficulty.
We're ready at this table if you want to take this question in the center.
Okay.
Hi, Amal. Nice to see you, and thanks for the presentation. So when you think about the price differential and the advantage that you provide farmers, are they ever left with the lack of a service component from a retailer or a distributor that you're then doing business with?
Yeah, good question. So a lot of times farmers will buy from a retailer or cooperative at an elevated price for service. And that could be a warranty to respray the crop or process a claim if the product didn't work properly. What we do is we guarantee the quality of the product. The manufacturers that work with us do. But in our estimate, the premium you pay for a respray warranty is hardly ever used. We went and did this research with farmers and asked, how many times did you ever respray? Or how many times did you need that warranty, so to speak, on the product? And it was very little, right? It's like buying the insurance on your trip out here. It doesn't make any sense. You hardly ever do it because it's a huge margin for the middleman, but it's no value to you. So the answer is we definitely run across growers who want certain types of service that we can't offer yet. But as we've gained scale, we're starting to be able to offer same-day delivery. So our logistics is becoming very sophisticated now in year 2, where many of our orders, I was just checking this morning, we were able to deliver the same day. So one of the things we get hit on is, well, I need the product now. We now, in many regions, can actually do that for a farmer. So I think it's not as big an issue as people think, and as farms get bigger, it becomes a smaller and smaller issue. Yeah.
In the back.
G'day, Emil. Matthew. Australia.
Yeah, it works.
Spell it out.
Yeah, it's working. We can hear you.
I'd just like you to comment in regards to the open data and transparency of your platform being leveraged by retailers to push the price and the return to the growers down.
Well, I think it's actually the opposite.
Yes.
So what happens is the price transparency forces the retailer or the co-op to compete and bring the price down. So for example, we have a number of growers who are spending $40 an acre on crop protection products, okay, from their retailer or co-op. They use our price transparency data as a member. They contributed their own, and then they got the analytics back. They went to their retailer and said, you know what, I can get all these products direct for $30 an acre. Are you going to match this price, or should I take my business elsewhere?
Actually, sorry, I'm talking about the retailer that the grower is selling to.
Oh, on the end product, okay. No, because in the case of commodities, the market's liquid, right? When I worked at Cargill, you can see this, right? Elevators transparently display their prices, and the CBOT has a price, and there's essentially a very liquid market. In the case of specialized crops, what we do is we actually contract it. So when you think about the contracting party,
it's usually not a retailer CPG firm. It's a food processing company. Sometimes it's an exporter or whoever it might be. And what we do when we price a contract is we leave upside in for the farmer, and we don't price until the appropriate moment. So there's mechanisms inherent in the deal that protect the farmer from, like, say, price collusion or other things that may drive the value down. And then we put ourselves on the side of the farmer so that we'll share the risk or reward on the market side.
That's really critical to the mission, is that you are putting the farmer first in the equation. I think we're out of time.
We have one more question.
Oh, one more question?
Two more.
Hello. Yeah. So one of the things I see when the grain product, quality of product, dirt, things like that affects price. So how are you going to do that in an internet process that the buyer knows what he's getting?
Well, the buyer has specs, right? So when you're talking about a specialized crop, take yellow peas, chickpeas, non-GMO soybean, they have a very specific spec in the contract, and that's communicated with the farmer. So the farmer has to deliver to that spec, and they know exactly what they need to deliver to get that premium or that value. When you talk about a commodity product, there's actually a very standard process for it, right? I mean, we're helping the farmer with either a risk management instrument, where they don't have to pay somebody else to manage their risk many cents a bushel, or we're helping them with a logistics solution when it's a commodity product like field corn, for example. And the process of evaluating the quality of it will not change. Now, one thing we have seen, and I think is important, is if farmers can monitor their own grain in their bin on site, I think they can manage and preserve the quality of it and at least have a position on it. Because a lot of times what happens is, it goes to a buyer and then they're docked, right? And we do want to develop products that help a farmer protect themselves from getting docked on the quality at the back end. But our goal is not to, so to speak, adjudicate the quality of the product. It's more to help create efficiency for the farmer and get those incremental cents or dollars per bushel. There's one more question? Yeah.
Sure, one more question.
Excuse me.
Do you want to tell me? I can repeat it.
We can repeat the question.
Here you go.
I'm curious to hear about your sales force that you employed, because were they skilled in ag, or what my experience is with Cargill, Monsanto, and some of the big conglomerates is, when the farmers group together, and they're very hard to break out of that because of fear that they may trust something new. So your sales force must have been, what was the technique?
Yeah, we have 32 salespeople now, and we're hiring 75 more in the next 6 months, and 100 more in the next year. The salespeople who are in the ag industry today, candidly, are lazy. They work 30 hours a week, and they go to the lake on Friday afternoon because it's like clockwork and it's a local monopoly. And what we do is we invest in something completely different. We hire kids right out of college. We train them in Sioux Falls, South Dakota on the phone. So we actually do internet and phone-based selling of technology. Most of our sales occur over the phone, inside sales. 99% of so-called ag senior executives when I started this business told me there's no way you can sell over the phone. Turns out you can. In fact, we're about to release an online store, and farmers want to buy over the phone just like everyone else. And then what we do is we take those 22 or 23-year-old kids from land-grant universities and we send them out in the field with a huge incentive package. They're entrepreneurs in North Platte, Nebraska, in Montana. I've got 3 people in Montana now, 3 in North Dakota. I've got 6 in Nebraska. And some of them are 22 or 23 years old, and they will outperform mid-career executives from Cargill or from the co-op, because those parties have become, frankly, lazy and entitled. Where's my truck? Where's my 30-hour work week? Where's my high salary? We are building a young sales force that fights for the farmer's business. Most of them grew up on farms and is willing to outcompete and work on a high upside basis. And we give, of course, everybody in our company is a shareholder.
which is an attractive feature for including our sales force out in rural America. And that's an attractive feature for young people, but anyone, to be a real owner in something that could have value.
Clearly shaking things up one farm at a time and hiring. So send all your young college grads with an interest in this area to Amol. Please join me in thanking Amol Deshpande, co-founder of Farmers Business Network.